Hi traders, I will run a similar analysis to the one I did on the Nasdaq logarithmic chart in our recent video, but this time I'm going to find price targets above and below current prices using Fibonacci channels as a means of confirmation. And by doing this, we will recognize that we have reached a significant long-term target, but at the same time, the whole corrective episode we are going through can't be labeled a major trend reversal just yet unless we see some specific levels being broken to the downside. You will also see that meaningful targets for the S&P are in the 50 to 100% gains in the next few years, unless, like I said, we see the current major trend invalidated and more bearish developments taking place. We have a lot of things to dive into in today's video. If you guys enjoy, consider dropping a like to support the channel. So let's get it. So here we have the logarithmic chart already with some lines on it, and here a price area that we hinted to in the Nasdaq analysis last week. This one here, very similar charts here on a logarithmic scale, and we see also here several descending supports that marked important corrections and breakouts during this whole ascending move from 2009. And the reason I do this is I want to find a price structure using the Fibonacci tool that makes sense, that subdivides this whole progress here in recent years to see if that last swing high that we had at the beginning of this year is a natural target for the S&P or not, or if we are still within a price area or within a channel, a Fibonacci channel area that is that hints of a major target ahead or not. If we are bouncing at an important junction here. And at the same time, we have the same exercise for the ascending lines. Anchoring here a support at the same February 2009 low together with this 2020 March low, establishing a line here, and then finding the ascending parallels to hit and to this ascending line, and we can see that the chart is organized within this ascending angle. We see that intermediate bottoms here along the line bottom and reacted at this parallel intermediate line, and also resistances along the way. We see that a resistance from that resistance low here, from that support low here, in this case, make also sense, and that finally we arrived at this destination here earlier this year, which corresponds to this ascending line established here at this breakdown level in 2008, this capitulation level that marked these lines. So similar to what we saw in the Nasdaq, where we saw that the price reached that precise line here, it would want it to go for one space more, one projection more to the beginning of this breakdown to really invalidate the message, the negative message that we got there. But similar to the Nasdaq, that was not accomplished, and we reverse from there. So now from here. Well, before we go on, we move on to the Fibonacci tool. We see also some horizontal lines. Those horizontal support and resistance lines are traced with the same criteria in mind. I want to place those lines at important swing highs and swing lows, or significant breakout levels, or pullbacks along the way, and also significant highs and lows. I could also go here and establish an ultimate low here at 600, at the 600 level here, which corresponds to this very same low here. Okay, so after doing this, I want to confirm these lines using the Fibonacci channel tool. And we can go here and use the Fib channel, and we just place a first intent here of the Fibonacci channel, and we play around with this tool and try to see if if the price action during the whole period fits into the segments, these segments of the Fibonacci ratio scale. So if we anchor the beginning of the line at this point, at the measure here in 2007, that was then meaningful at this breakout in November 2010, this pullback a year later, we see that this descending angle did make sense here. And then I just forward this the one level, the 100% level into the future and try to fit the lines with the descending lines that I already had on the chart. Okay, and we do find, for instance, if we put the one here, the 100% here, at this point, we do find that the retracement here back in 2020 did reached a Fibonacci retracement parameter here. The previous ones in 2018 were a little bit blurred, but we see then that using this, we are still within that space towards the 1618 target. So we can continue playing with this tool, anchoring it a little bit earlier, putting the one here, the 100% at this same descending line here. And here I see that we have reached this 1618 extension of the channel, which is not only on long-term charts, but also on intraday, very short-term charts, is usually a natural target for any serious price advancement, the 1618% Fibonacci. So we can also see in the past that all the Fibonacci lines do fit within the development of the price in this case, and so we can infer from here that the next advancement within the Fibonacci scale will be within this whole area here. But since there is a lot of room towards the next Fibonacci extension at the 2.618, we should perhaps subdivide that area into another Fibonacci channel, okay, so that we get some intermediate points to work with as targets moving on, okay? And we can do the same here. Before we move with that, we can also do the same here with the ascending lines. We can subdivide here the whole ascending channel in lines and see if those supports fit the price action. And as we can see, it fits pretty nicely here. Even the top here in the most recent top earlier this year fits into one of the Fibonacci segments, and that we have still that segment above us that is in itself subdivided into two segments. One of them going back here to this crucial point here on the chart, similar to the one that we used to establish this ascending line here. Where the price started or continued breaking down in steps before it seriously broke down from this 0618 segment of the whole ascending channel. Okay, and by doing this, we come across the first intersections of this Fibonacci channels, one here in June 2024, well above current prices. We have a ultimate target here at the 17,200. This is still a long way to that level. So, but what we want to do right now is we want to subdivide that portion of the channel in smaller advancements and see if from here if we can find meaningful intersections to work with. Okay, so we will be now inserted here within this triangular area, and we see that several advancements from here are possible. We do have this important segment here, this horizontal line pointing at the 2200, then another one 2700, 800. Perhaps we want to do the same work with the Fibonacci scale and try to see if these horizontal levels, if we use in this case, not the Fibonacci channel, but the regular retracement tool. And just let me zoom in here a little bit and see if the whole process here, if this whole process, if it fits within the scale, right? We have some red lines, as you can see, one here, another here, 2700, then the bottom here, where we are anchoring the tool, the top here. If you anchor the tool at these extreme levels, okay, this low here in March 2020 and the high at the earlier this year, then we see that more or less the Fibonacci segments fit into the price structure, and also our support lines here along the way, more or less they also fit within this this structure. We lose perhaps here the if we can perhaps invert the scale here so that we have the 100% here and the 0 here, because we are now retracing, right? So want to see that if those retracements right now fit within these Fibonacci parameters, and we do see that more or less these support lines that we have drawn on the chart here, the 3,200 and below that 2,780, more or less, they fit more or less here with the Fibonacci retracements on the chart. And we have another one, the 50%, which is not a Fibonacci ratio, but it's counted as a meaningful retracement parameter, is just below the current prices. And right now, coincident with this ascending support line, the green line that is just here below. So we could still see a minor drop here, finding support in the short term towards this area. So from where we are now, we could still see a drop to that area, and then we could from here we could eventually start seeing some further advancements. We have an important intersection here in January 2024, but before that, December 22, we have a target here, which is the intersection of the current, the most recent high, and one of these ascending lines. So we could see a development of this kind taking place. That will be a very V-shaped reaction to to what we are seeing right now. And we could also see the market trying to go deeper towards a deeper level here of these finding this horizontal support. But this support, as we can see, does not see any important interaction with any of the ascending lines. It rather sees it here in August, September next year. This could be a meaningful bottom before a potential upside recovery, but we could also play with intermediate lines if we wish to this ascending line. If we take this ascending line, for instance, and we move it a little bit higher to this area here, eventually we could see the market trying to bump here at this 3,200 target, much ahead of this October 23 intersection. Yeah, but that is a minor intersection, because the the price or from the price structure, we do see a strong advancement here, where I could eventually put the line on with this large candle, but it's still inferior in importance to the one to the bottom here. So this support line becomes more important as a target or as a magnet, so to say, for the price action. So we would rather see, if we see any continuation of this correction, we would rather see the market looking for those intersections next year in September rather than in October this year. Okay, but that would be a potential development. So on the whole, the S&P can still fall a bit further, looking to establish that lower low bounce from the 3,500, 600 short term. It could also look for a deeper retracement towards the 2,200 handle, but that is a weaker target from a dynamic support resistance perspective, unless it extends to 2023. And only a break of this ascending support from the 2009 low, as we can see if we zoom out, this ascending support here would serve as a warning that the long-term trend has changed to bearish, and we would then enter a potential bear market just by trading within these areas. Okay, that is for now a scenario that we shouldn't consider unless we lose these two layers of support, of intermediary support, before we reach that line. Higher targets like the 7,900, for instance, or here the 8,700, or even further the 9,500 is pushing towards the July 24, while the two previous ones, September 23, November 22, the first target. Just by considering the interactions of the Fibonacci extension areas, or even above the 10K here in October 25, or ultimately here above the 1300 in 2027. These targets are only to be considered if we really resolve out of this kind of triangular shape that we could be involved with here in the next coming months, and we see a clear break up and above this descending line, and also the line that is corresponding here to the 1618 extension of the Fibonacci channel tool. So only if the market starts trading above this area, we would then see the market accelerating towards this area. First, the market would obviously try to reach the all-time high, and then resolve higher from there. Therefore, my long-term stance for now is neutral until we resolve out of this kind of triangular area. But all these targets, all these recommendations, as you know, are educational oriented recommendations. I'm not your financial advisor, so don't take my advice on any of these recommendations without doing your own research. Full disclaimer on the video's description. So that's all I've got for you today, and have a good one, guys, and see you in the next video.